This is going to be short. I just want to go over a trade that I took on Wednesday. Please, is this recorded? Yeah, I'm recording it right now. Put this over here. I'm going to let a couple more people come in, guys. Yeah. This guy had too much to drink. The reason I'm making this is because I put up an Instagram poll like 2 days ago and said, what do you guys struggle with the most? And the options were direction, bias, conviction and strategy, or entering, exiting, and holding trades. And everyone said entering, exiting, and holding trades. So this is going to just kind of be a full breakdown of that just with one trade and how you can use it. Another thing too is you can't hear me? Well, that's fine. Another thing too is I was listening to a video last night and was thinking, how can I apply this to trading? And I think that the majority of the reason that a lot of people fail with trading is that they think that there's like some additional strategy out there or one secret tool or one secret confluence that they just haven't found yet. And they think that that's the reason they aren't successful, is they're like, well, I don't know enough. And that's just the complete wrong approach. You guys, for the most part, have either went through Barron's Premium, Barron's Mentorship, My Premium, My Mentorship. You guys have all the tools necessary in order to be successful at trading. If I have two people, Person A, they use everything that I know, everything that they've learned, and they think, okay, I'm convicted in this. I'm confident in this strategy. I've forward tested it. I've built conviction in the things I know. Versus person B who's like, yeah, I just don't know enough. There's something else out there that I just haven't learned. Person A will kick person B's ass every single time. Make sense? Oh my God. Why are Philip and Barron on demon time? They're always on demon time, bro. Always. But yeah, I hope that makes sense. Like, if you guys just use the knowledge and resources that you have, like, you're gonna win. You just have to build conviction with them. So I am gonna share this real quick. I'm back on the XFAs, took a payout on the live, realized I can make a lot more money with XFAs, and that makes sense because I made 38K this week in 4 days. And you guys know everything that I know for the most part. I've shared all the knowledge with you. So if I can do that, then you guys obviously can too. And this trade that I'm gonna go over, like, kind of perfectly exemplifies everything we know. So I'm gonna shout out Barron here because he did give an Edgeful stat that gold 70% of the time takes out the high or the low of New York session. And so when we opened up here on Wednesday, like right here, okay, we opened here. What are we going to take out first, guys? Like, are we going to take out the high, or are we going to go all the way down here and take out the low? Like, if we're 70% of the time, we're going to take out a high or a low. This high right here is pretty significant for us to go take out. So in Asia, but like from New York session. Just because we take out this high doesn't necessarily mean, hey, we're going to dump right after. You know, if buyers show aggression and show that their efforts are being rewarded, obviously we're going to look for longs. But the first thing I know is obviously we sold off 300 points in the last 2 days before this. We've now understood that sellers are factored into the market. So if sellers are now in the market, we can't just be looking for longs because, you know, for a month and a half, 2 months, it was pretty easy just to get in with longs. But now we have to be more objective. We have to read the order flow. We have to see what's going on and you know, make more educated decisions. And we have to just remain objective. The first thing that I saw after we took out this high from Asia was we had a CVD divergence. And I had a lot of people asking me, like, how is this a CVD divergence? I've seen this happen a lot, and it's worked the majority of the time. Basically, looking at the CVD on the chart, what do we have? A high and basically an equal high. I mean, it's 1 point off, but then the second high that was equal is like 7 points lower. In my opinion, that is a CVD divergence. If there's equal amounts of buying, but not an equal amount in resulted in price, that to me is showing me that all the buying here is not being as rewarded. I told you guys, and I'm gonna go on Discord real quick, or if you're in my premium group, you saw it at 6:31. I literally said, hey, I'm in a short. So what I saw at this time to enter into the trade, I'm gonna pull this back real quick. Yeah, like right here. What do we see? We have our value area high, we have our value area low, and we have our point of control. In my understanding of volume profiles and what I've used, if the market was going to push up and continue higher, this point of control would have been near the higher end, because that would have shown us buyers and sellers are agreeing on the higher prices. They would have been pushing towards the higher end of the value area. But the fact that this time, when the point of control and value area low are damn near equal, that's showing me that they are pushing towards the lower end. And we'll look through it on Bookmap as well. But you know, we have our high right here at the value area high. This is basically equal, and we're back below VWAP. That is a sign for me to get in shorts. Now, let's look at the reason I stayed in this trade. Let's go to Bookmap. What we see here is, you know, I'm in a short, but I'm trying to remain objective. I'm looking for every reason to stay in the trade. I'm also looking for reasons to get out, because we got to remain objective. Now what we see is a CVD divergence. Where is it at? I know. Yeah, right here. Somewhere. Yeah, here. We have our high, and we make a lower high on Bookmap, but on the CVD we made a high and a higher high. So now we have two CVD divergences. We had one on the TradingView chart. We're in a short, we're trying to remain objective, and now we're saying, okay, we have more buying pressure, but we didn't make a higher high. So now if you're in the short, this is a green light. I'm gonna hold the trade. I'm gonna stay in this trade. Maybe I add to my position. What else do we know? If we're looking at TradingView, this is right here at VWAP. Even if you took a long here and you see that we're not breaking above VWAP, and if you're in a long, you're saying, okay, but there's a CVD divergence, maybe I get out of the trade. Maybe I go break even. Maybe I just get all out, because now I'm seeing that buying is not being rewarded. We luckily were in shorts, and we're saying, okay, this is looking pretty good. Another thing too, as the market continued and it was developing, we're going to draw the volume profile out even more. We had two more attempts coming up to VWAP. Once again, we're in shorts. We're saying, okay, the market is failing to break above this. I also want to go through this real quick. I had two people reach out to me and say, why did I put my stop at this high and not this high up here? Well, if we go back, when we get into a trade, we want our stop to be where the market's least likely to go, and we want to put our TP where the market's likely to go. It's crazy, right? If this is the value area high, we know that this is the 30%. Why would I add additional risk when my trade would be invalidated right here? If it comes back up to this value area high, now this is going to push up, and it's likely to take out this high anyway. So I went from a 5R to a 2R. I doubled my risk to reward just because I put my stop at the value area high, because I know that's where the market is least likely to go. That's another way to use risk management. If you're wrong, you want to be wrong quick, and you want to lose the least amount of money as possible. So that would tell me the trade's invalidated, and I doubled my risk to reward because of it. So obviously, once again, the market is continuing to develop. We're failing to break above VWAP. The value area low, the point of control are moving lower. The value area high is moving lower. Maybe if you were in this trade, you wanted to add at VWAP, or maybe you moved your stop to these highs because now the value area high is continuing to move lower. I didn't do that until we really broke below this value area low, but you could have, and it definitely would have made sense, and it would have worked out in your favor. So the order flow confirmed this. TradingView confirmed this, the volume profile confirmed this. When we actually broke below and we traded into the volume profile from the day before, now we're back below the value area low. We've kind of broken below it, displaced, if you want to call it that. That's even more of a sign, because if we were just balancing at this value area high, that could be a sign. Maybe buyers find, they like this price and they want to continue moving up. But once we broke below this value area low, it was pretty clear I was targeting this point of control. I didn't, it obviously didn't go down there, but I got the majority out of this position. And another area that you could have got in just for, 20, 30 points is even when the market opened, or when at 8 p.m. when we had a nice push up, once again, we failed to break above VWAP, and you saw the same thing on TradingView. We had a nice push up, a lot of buying going on, but we couldn't even break above the point of control. Once again, we're in shorts. This looks good for shorts. I could add, I could adjust stop, I could do whatever it takes. We can see the same thing on Quant-Hour. Every time the market came up to VWAP and came up to the point of control, we see a lack of buying at the highs. 6 total aggressive buyers, 7 total aggressive buyers, 6 total aggressive buyers. And when the selling comes in, we actually move down. Buying doesn't move the market up. Selling does move the market down. It's really clear. Like, I just showed you 4 or 5 tools with volume profile, context, location, absorption, CVD, if I already said that. There's a lot of reasons to take this trade. Why did I get out? I was trailing really aggressively. Once the market actually started flooding down, I was trailing very aggressively, like every 3 points. And, I genuinely got the most out of this position. I wanted it to come down to the point of control, but it doesn't have to do that. It ended up coming down to some higher volume, found some buyers. We can see it on Bookmap as well. Once we came down to this position with a lot of selling, we found the buying start stepping in. So I think that's a perfectly executed trade. I want to look at it here as well. We see the stacked imbalances. And it's pretty, gold's been really volatile, so this is hard to look at because everything is basically stacked imbalances. But we know when it kept coming up here to VWAPs, we have this stacked imbalance between buyers or sellers and buyers. We couldn't break above it, and it's at VWAP. So more additional conviction, more additional confluence. I hope that makes sense. One more thing is these 55 levels. If you guys know what these are, it's the MOC high and low. Every time we came up to these MOC levels, couldn't break above it, kept rejecting below it. So those levels, VWAP, volume profiles, absorption, CVD divergence, clean trade. So I know people were asking me about that, but it's very simple, very quick, but you can apply this to any trade. I can go over one on NQ as well from the day after it. If you guys have any questions about that though. Also failing to push above POC on higher time frame. Yeah, exactly. Jaron, are you a groiper? This is going on YouTube. So that's my answer to that. Good boy. Yeah, stop it. Stop. Stop. Do you guys have any questions about that? It's crazy. That's crazy. These boys are talking about 2K. That's crazy. That's crazy. What indicator is that called? Which one? See, it's literally just called cumulative volume delta. It's right here. It's great. The TradingView chart one is awesome. And I'll show you another one on NQ. Some people don't like it. I genuinely think it works every single day. This is another one I want to look at. So NQ. This was Thursday when it literally just ripped up basically all day. And I woke up a little late, but I still ended up getting longs on this retest. But the reason that longs look so good here, if we're looking at the overnight inventory and the overnight volume, we came below the value area low, ripped up. Came above the value area high, ripped down. Came below the value area low, moved back up. What do we see at the lows? On the chart, we made a high and a higher high. On the CVD, we made a high and a lower high. So, okay, now I don't even have to look at Bookmap. It's going to give me more conviction, and this is pre-market, but this is kind of setting the tone for where I think the market wants to go. We have a CVD divergence yet again. And so once that happens, even if you were trading at this time, maybe once we break back into the value area low, into the range, you want to just target this high. But now we've clearly broke above VWAP. That's more bullish for me. The market, every time selling came into the market from the point of control of the overnight inventory, we had a push up. Then we pulled back down to the value area high. Once we've actually broken above it and built volume higher, now we're moving up again. You can use these things to your advantage, and it's very easy, guys. It's insanely easy. It's very simple to use. But yeah, that's just another example. All the buying came in. There was a lot of selling absorption at these key levels at VWAP, and we continue to move up. So CVD divergence yet again. I've had a lot of people ask me, like, is there one thing that I have to enter a trade? Do I have to have a CVD divergence? Do I have to have absorption? No, I just like to think of the market of having a bunch of tools, so I can use these tools at any given time. I can use volume profile, CVD, absorption, VWAP, fib levels, whatever it may be. And that way, whatever the market's doing, whatever it's providing, I have a way to get into a trade. So you got to forward test these things, and you have to build conviction with them and get good at them, and stop thinking that there's something out there that you're missing. You're not. You have the knowledge it takes to be successful. You have the resources. You just haven't built conviction, and you think that there's something else you need, and you just don't. So these things show up every day. These two examples that I showed you literally show up every single day. It's that simple. Mechanical trading is for ICT. Well, the market isn't mechanical, you know? It's not mechanical. So it's hard to have a mechanical strategy. I just want to be able to pull out the bag of tools that I have, and whatever the market's doing, balanced, trending, I want to be able to get into it, put my stop where the trade's invalidated, lose the least amount of money as possible, risk the least amount of money, and have higher targets. And you can do that with volume profiles, heat maps, footprint charts, CVD. It's very simple. So make more vids on YouTube. This is going on YouTube. I was going to just make a YouTube video on it, but I thought it would make more sense to do it on Discord. That way I could answer questions that you guys have as well. Go over trailing. I mean, yeah, it's trailing once again, I think is, I think that's preference. One thing that Baron showed me is like you can trail every 5-minute or 15-minute candle. You can use EMAs. You can trail on with the VWAPs. I'm more of I like once it's kind of past my TP, whatever I have, like let's say I got in here, CVD divergence, traded back into the value area. Maybe my initial target is just this value area high. But once we break the value area high, maybe I'm just trailing on a 5-minute candle or even a 1-minute candle if I'm being, kind of stricter about it. Maybe if you have the idea the trade's going to move a lot longer, you put on an EMA and you trail it that way. Maybe you get stopped out. It comes back down to the point of control. Okay, it still looks good. I see absorption. I see exhaustion. I see something on Bookmap that's showing me that buyers are failing. I'm looking at the CVD and it's obviously still so bullish. All the selling here is being absorbed. I get back in and then I just trail. I go break even quick. I'm the kind of guy, I like to go break even relatively quicker. And so like that's how I trail. It just depends on the trade idea and where I think the market's going to go. You could do EMAs, but I'm more of a scalper. I would consider myself that I get in and out of positions relatively quick. That's what fits me. I don't like to spend all day on the charts. So I like to get in my position, go break even quick, let the trade run to a decent, risk to reward and call it a day. It's simple that way for me. Do you ever look at time frames under 5 minute? So I'm going to go back to this GC trade. I was on the 1 minute for this. So like it helped me to see exactly what's going on. Once again, I'm looking for every reason to stay in this trade. I'm also looking for reasons to get out. Every time we'd come back up to VWAP and it was like on the 1 minute, we continue to just fail to break above it. So like if I'm looking for precision, maybe I go on the 1 minute, but I'm on the 5 minute for the most part. And so we're looking at the 1 minute. Okay, the value area low is adjusted lower. We're failing to wick above it, break back down. Can't break above VWAP, break back down. Now we push below this value area low. What does that mean? That the market is agreeing on lower prices. Now the value area low is moving lower. Okay. Buyers and sellers are agreeing on lower prices for this point. This is all the reason for me to stay in a trade. If this point of control continued to move up and the value area high moved up and now we've closed above VWAP, maybe I need to get out. Maybe I'm just break even and maybe I let it run, or maybe I'm just going to take the profits that I have. But it's okay to get out of a position quick or to go break even quick, because if the trade comes back up to your original spot and still looks good, you can just get back in. That's how I trade. It's worked for me. More of a scalper in that sense. But yeah, that's like if I'm looking at the 1 minute, you can see the same thing here, right? Equal highs, not equal highs. On this push up at VWAP, the buying isn't significant. Saw the same thing on Bookmap. Once again, every time the buying came in, tried to push the POC, tried to push VWAPs, a lot of buying, immediately invalidated. So all these buyers are completely put underwater. It's that simple. Always cheaper to get back in. I agree. It makes me feel better about my trades. I know I learned that from Fabio too. Like he'll go break even very quick as well. Because if I'm trading the value areas, even if I'm trading this value area high to the low, once we break back into the value area low, or value area high, and I'm targeting this value area low, the trade shouldn't come back up here because it's likely to traverse the range. So I'm going to go break even insanely quick and it went straight to TP. Okay, now we're at this value area low. I'm looking to target this high. I'm going to go break even quick. Oh, we came up to VWAP and we rejected. Maybe I move my stop to the point of control, or maybe I just, get out altogether because I would have got stopped out. Okay, we're buying's coming back in. Oh, we wicked above VWAP again. Maybe I just need to take profits. Maybe I need to get out because the order flow and what the trading view chart's showing me and just looking at VWAP, the pressure is not moving up higher. And it's continuing to break back lower on Bookmap as well. Like, okay, all this buying, immediately selling back off. The sellers are present. And so, yeah, that's relatively quick. I was going to make a YouTube video on it, but wanted you guys to just see it in real time. And if you had any questions about it, you could answer. How do you determine when you enter? Is it as soon as you see absorption? I feel like I see stuff, but sometimes I get in too late. Yeah, I mean, Hogue has said this. It's like sometimes waiting for confirmation, you'll get a better trade, but you're risking, or you're sacrificing your risk to reward. For me, I use volume profiles and value areas. If this is absorption, and now we've broken back into the value area high, I'm not going to wait for a 5-minute candle close because now the market's already down here. I'm just going to get in when I see it on Bookmap. And if I'm wrong, okay, I'm wrong, but I didn't lose that much because my entry was so good. But that goes in line with, if I'm wrong, I want to be wrong quick. And if I'm wrong, I don't want to lose as much money. Because if I enter here and my stop's all the way up here and then it comes back up because I'm wrong, I lost more money. That's how I like to trade. What time do you trade futures to ensure you have the highest probability? New York session, 9:30 to 11. If you're trading gold, I think COMEX open is at 8:20. Is that right, Baron? And then gold at night during Asia, 8 to 10 p.m. Eastern is really freaking good. This was at 6:30, but like everything showed up here for me to take this. But if you trade at 9, it's insane. Less time on the charts has been good for me. Find your hours that the volatility is coming in and get in. Do you prefer GC over NQ? At this point, yeah. Yeah, at this point I do. Like every trade I took this week, except for that one on NQ, was gold. Like dang near every trade I took was on gold, and I made $38K in 4 days, right? So, yeah. What about gold during London? It's awesome. I'm just in REM sleep at that time. It's 2, 3 in the morning at that point. So I'm not trading it, but it is really good. I've noticed. What's the best time range to trade gold? If you're trading a New York session, like 8:20 in the morning is significantly better. You'll see it. I mean, let me see. Yeah, like literally this low on Thursday was right at like 8:20, 8:30. If you would have waited till New York session, you would have long the highs. 8:20 was the low. I know Barron's caught really good trades because he's been up an hour or two before, in Q market opens, but he'll catch really good trades on gold because he's up earlier, catching the majority of the move because that's a lot of the times when the move is set. Here, like this was CPI, but move happened at 8:30 and then just moved up the rest of the day. Here, this low right here was at 8:15, 8:20. If you would have waited till New York, you would have gotten up here. That's the move set, 8:20. When using CLC, what are some locations of interest for you? Supply, demand, fibs, VWAP, value areas. I mean, value areas are the most important for me, right? Like value area highs and lows. Like even this low at 8:15. I know this is after the move has been set, but it's like this move at 8:10 was the low and it was at the value area low. Okay, value area high, trade back into the range, target the low. Okay, the high, the low. Like value areas aligned with support or resistance or supply or demand. This would be supply. It's not supply until we've revisited that area okay, we came back down, pushed back up, point of control is moving lower. Maybe we see absorption, exhaustion, CVD divergence at this price. I mean, crazy move. Me and Barron were actually in this short. I was in this short at 9 o'clock, this high right here, and I got out. Sometimes you kick yourself in the butt because if I would have woke up and just had a TV, it would have made a lot of money. It's hindsight, but you see absorption, you see failed buying, and you get in short. And I got out very quick, but it is what it is. Do you use session VP or fixed? I use both. I like the SVPs because it gives you a range. Like this whole time that gold moved up, the POC and the value areas continued moving up. That confirms the move. Here's the significant one. There's this high and we made a higher high, but the point of control is lower. So like that could be a good indication, okay, the market moved up higher, but now the point of control is lower. So there's some difference between buyers and sellers. There's some disagreement because even though we moved up higher, now the point of control has moved lower. And what happened the next day? We sold off. So that's how you can use it. Okay, here, we ended the day lower on Friday than we did on Thursday, and the value area is lower. That could signal to me, okay, maybe when the market opens on Sunday, maybe we move back down, target. I'm not convinced that this is the low. I'm not just looking for shorts. This very well could be the low. But if I'm just looking objectively, this isn't telling me that, okay, the market's just going to push back up because the volume profiles in the value areas aren't telling me that the market's going to move up. If I'm just looking purely here at the volume profile, these are sessions. These are the day difference. As a matter of fact, the value area high is at Thursday's point of control. It's moving down. Another way you can look at it is like if you go to settings, canvas, where's it at? Yeah, like if you take off the body, the borders, and the wick, like it's pretty easy to look at the volume profiles just here, right? Like I like doing this on NQ sometimes. It's like, okay, this kind of shows me where the volume profiles are. And it's like, it gives me good indication of what's going on. And sometimes it's easier to see it like this. I like doing it like that sometimes. Like if you're just looking at this example, volume profile, point of control, even though this is consolidation technically, or a fixed range or a balanced range, the point of control continues to move lower. Point of control, point of control, point of control, sold off. Where did we bounce off of? This point of control from the higher time frame. Push back up. Point of control is higher now, then we push up. It's like you can just use these to your advantage just looking at it like that. And that's a good way to get a directional, I don't want to say bias, but just an understanding of where the market's likely to go just using volume profiles. Do you prefer looking to short at value area high and long at value area low? I mean, that is a good way to look at it, but you don't just want to ever enter blindly. You want to see, that's why we use order flow. And that's why we look at Bookmap and the footprint charts to see once the market hits that level, okay, who's in control between buyers and sellers at this time? Here, we came back up to this value area high, and I'm not just looking to short this because now we're up above VWAP and there's probably some selling here that's not, the effort's not being rewarded, and we're continuing to ride VWAP. Okay, now we came back up to this value area high from the higher time frame. Am I just going to short that? No, because we have a huge push up. I know it was CPI, but it's the same thing. We push up here. Now we've clearly accepted higher prices. I can't just short because nothing else, there's no confirmation. So you can have context and you can have location, but if you don't have the confirmation by the order flow, it doesn't matter. You got to be able to read it all. So, but yeah, do I still live with Baron? Yeah, I do. What sessions time are your profiles for NQ? It's at 6 p.m. Eastern up until the day closes. So like every time a new volume profile opens, it's right at 6. And like that's just when it sets. So yeah, that's the 2 trades that I took. Hopefully that makes sense how you can use these things to your advantage, get an understanding of bias, when to enter a trade, when to exit, how to use these tools to your advantage, forward test with them, build conviction with them, get good at them, because you guys have all the resources it takes to get good at trading. Can you post? Yeah, I'm posting it on YouTube. So, okay, cool. If you guys are good with that, I'm going to go ahead and get off. And yeah, hopefully you found some value in that. I will post it on YouTube like right after this. So, yup. Okay. Deuces.